Good morning. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, bringing you the morning comment for the 15th of February. Asian equity markets mostly in the green. Asian equity markets rallied today, with the only exception being China's Shanghai Composite, which closed somewhat below its opening mark after a week off. Japan's Nikkei jumped by more than 7%, but given that the overnight data showed that the Japanese economy contracted by more than expected in Q4, we see the possibility that the bounce could be short-lived. The jump may have come as a result of Prime Minister Shinzo Abe's comments that excessive volatility in FX is undesirable and that Tokyo would intervene where necessary to influence such moves. The stock market rise curbed the demand for safe haven assets such as the yen, the euro, and gold. We believe that the positive sentiment is likely to carry over into the European markets, which could recover some of their recent losses. Nevertheless, with no clear evidence that concerns over the global economy have dissipated, we will treat the recovery with a caution. China's exports and imports continue to disappoint as they fell much more than expected in January. The trade surplus increased, but only because imports fell faster than exports. This suggests that the depreciation of the yuan has done very little to boost the competitiveness of Chinese exports since August. In an interview over the weekend, the People's Bank of China governor said that there is no need for continued yuan depreciation. Indeed, the yuan's fixing today were sharply higher than usual, which makes us believe that the People's Bank of China may need to act again in an attempt to revive the Chinese economy, perhaps in the form of additional rate cuts or reductions in banks' reserve requirements. Now, as for today, with no major releases during the European Day and the US and Canadian markets closed due to public holidays, the focus will be on the ECB President Mario Draghi's speech before the European Parliament. As for the rest of the week, on Tuesday, the Reserve Bank of Australia releases the minutes of its February meeting. At this meeting, the bank remained on hold but signaled a strong easing bias, which would depend on incoming data. The bank also acknowledged the global turmoil and the risk that poses to domestic conditions. RBA Governor Stevens said on Friday that whether the recent turbulence has affected aggregated demand in Australia cannot be answered yet. Therefore, in the minutes, we will look on whether this view is shared among all Council members. The UK CPI for January and the German ZUW for February are also coming out. On Wednesday, we get the UK employment report for December and the Fed releases January 26-27 meeting minutes. Since the meeting, the uncertainty surrounding financial markets has increased and concerned comments from several Fed members, including Chair Yellen, have eliminated any market expectations for a March hike. Therefore, we believe that the minutes are likely to be viewed as outdated and the reaction in the US dollar could stay muted. On Thursday, from China, we get the CPI and PPI data for January. The CPI is expected to have accelerated, while the PPI rate is expected to have fallen at a slower pace than previously. These indicators will be watched closely as low inflation in China is one of the main causes of global deflationary pressures. Any signs of a soft reading could put more pressure on the People's Bank of China to introduce further stimulus. Finally, on Friday, the main event will be the US CPI data for January. The CPI figure is expected to have accelerated significantly, partly due to energy-related base effects in the CPI calculation. Given that the Fed has implicitly signaled that the rate hikes are currently on hold, while policymakers assess the impact of the international turmoil on the US economy, any acceleration in the inflation data could bring forward some expectations for near-term hikes. The European Council will also meet on Friday, and amongst the main points of discussion will be the UK in or out referendum and the draft deal proposed by the European Union to the British Prime Minister. The meeting will be closely watched as a proxy for the likelihood of a possible Brexit. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, wishing you solid trading.